Yo, what's up, guys? Welcome to Mr. FX segment. And today I want to give you two trades, around three trades that I'm looking at this week, my focus and everything in three pairs. And I hope that if you follow along, maybe you might find something. So remember that when I'm doing the analysis on the currency pair, I start by looking at the futures because these are the real price of the currencies, right? CFDs. So when I come here, I want to look at, I'll start by looking at the euro as the number one. You can see I already took my first position here, but I closed. I want to get a proper entry again. I want to get a proper entry. I'm bullish on the euro. And let me go into the euro future and show you what I'm looking at. When it comes to this euro future, again, my rules are still the same here. So we'll go to a bigger time frame, a weekly time frame, and I'll be looking at fundamental aspects because look at our rules. Our rules is rule number one. I want to look at the retail behavior versus the smart money. Not smart money, these are the commercials. They are just there to protect themselves. They are not trading actually to make profit, but they're trading to protect themselves. They are like politicians. Politicians, they'll not come to to a hospital to pay your bills, but they'll come to your burial and give hundreds of thousands just to fund your burial. So this is how commercials works. They don't like retailers. They are always behaving against the behavior of retailers. So I want to look at that. Then I'll go to number two to look at the smart money index, like this, the bias of the commercials. How strong are they? All right. And I have to look back even up to 3 years back. Then, because the market is always just moving the same pattern, the same everything, different time frames. Now, value in the market. If I'm trading the euro, I want to look at the value of the euro, the dollar, the dollar actually what other people use like DXY against the euro. But now I don't look at DXY as in terms of candles, but I look at it in terms of the value. Then my step four is the Canvas algo. I want to look at what is the pattern of this pair in the last maybe 4 years. What is the expectation now? Then I'll finish with the technical. So I'm going to do something sort of a top-down analysis, all right? The top-down analysis. Now let's get started, guys. We'll go to, okay, this is a euro, all right? So I'll pull out my first tool. Then I'll look at the commercials versus non-commercials. So we're going to look at the COT report, and I'll be looking at the two indicators. This one is this one just the retailers. Then this one I need to go and change it to non-commercials net position. All of them, they must move on the same direction. Retailers and non-commercials, all of them, they are trend followers and they are always on the same direction. I want to see them being in one side, like what you can see here. All of them, they are bearish, and when they are bearish, we get a long position in the market. For example, just to take you back, remind you of something, like here, we look at this area when they were bullish here. They were bullish on this one. And when they're bullish, when they are bullish, the market will always sell. And when they are bearish, the market will buy. For example, here, when they were bearish here, you see, the market did the opposite, went higher. Again, look at this area. Here, they were bearish. Here, they were bearish. We look at that. Here, the market went the opposite. So these guys, they are just always on the wrong side, as you can see. And that's how you backtest this behavior of the retailers versus the non-commercials. So right now that they are bearish like that, this is just enough for me. I know that I'm going to expect that this the first step, the first thing I want to see. The moment they are on one line like this is what I want to see. An example of what I'll not want to see, let me show you. If I go to a pair like, let's say the pound. Okay, the pound is fine. I want to look at something different. You see, like what we are seeing here, retailers being bearish and commercials being bullish. I don't like this. The market is going to be noisy and I'll not want to be there. So let's proceed with our euro. Once I get to see this is enough for me. So I can remove this indicator. Then I'll go to step two. Step two, I'll be looking at the smart money versus, I mean, the strength index versus the smart money. Now, let's look at bring in the commercials. These are just the smart money, the commercials here, net position here, and we'll remove the retailers here, and we're left with this. So what does it mean? I want to see if the commercials are bullish. Remember, guys, these are the real positions in the market, and these are just not indicators. Like these are the contracts, all right? So if we are above there, we are very, very bullish, and I can see here we are very, very what? Very, very bullish as well, because previously we were selling. So once I have that, this gives me a mindset of expecting a buy. You can see last time they were here, like right now, this way we are expecting a buy. Let me show you when they were bullish here and up here, they were bullish the same way. That's when you got the move to the upside. Here bullish and here, there's that move. And remember, guys, this is a weekly time frame. One candle is having 5 days. Imagine what is this here, right? Look at this. They were bullish here and here they are bullish. If you do this, you see, you get a buy to the upside. So once we have that kind of idea, I can now say that, okay, this looks good. And now I just want to look at the what? At the index now to see the strength of these guys. And I want to look back how they have been positioning themselves, because the data I'm seeing here, I can only collect fundamental data in the last 6 months. So I'll have to go back and look at more data. And I go to something like around 52 weeks. 52 weeks, that's a whole year. That's a whole year. And you see that commercials are still bullish, retailers are still on the other end. What else again here? Let's look at 2 years, all right? 2 years has 104 weeks. When you look back, we can see we still get the same very data. And the fact these guys that are very, very bullish here in a 2 years period of time. The far we can go back to is 3 years. And man, look at this. This is just so good. The move that is going to come in here. Look at this. If you follow the last time it gave us the data of the last 3 years, look at even here. It has gone even higher than this one. Look at this one. When you got the data of the three years, this is what we got, man. Again, this is another data we got here. A very big move. Look at this one. The last time again this happened was here, 2022. That's when you got a very huge move to the upside. So once we have that, we know that we are buyers, we are bullish. Let's look at the value of the dollar now. We look at the value of the dollar. DXY, we need to look at it in daily time frame. And you can see it's already valued, it was undervalued, and this means that now, if it was undervalued, then what happens? The euro is going to gain strength. It's going to pump. It's going to pump, right? Now, another thing we can look at is the algo focus. Algo focus, just want to see what is going to happen on the euro. And this is what we have. It's going to kind of mess up a little bit until Friday. It'll drop and we get a push again to the upside. But this just a date of 1 year. Let me look at it in the next 6 months, because this is what I want to see. What's the future of the euro? There we go. So the buy is already, we're expecting to catch that move, yeah? And this move that we're going to expect is likely to go above this high, to break the previous structure, but I don't know. Let's see what will happen, yeah? The market can do anything. So once we have such information, those are the fundamental buyers. We are now bullish on this particular pair. So if we are bullish, what do we have? Let's try to apply the technicals now. Let's go to Euro USD. We're going to apply our technicals here. Yeah, okay, I did this analysis yesterday with a friend. we did this and the market failed just to come here, but the pattern is still the same. Okay, let's go to a bigger time frame, all right, a monthly time frame. We're going to rally down to what we call technical analysis on the Euro USD, right? On the Euro USD, our technical analysis, if you follow this structure, look at the market on a bigger time frame. This is a monthly time frame. And on a monthly time frame on Euro USD, where's our liquidity? Remember, we need inducement. So according to this one, our inducement was here. This was a major high. This means that when you break this structure to the upside, you get a new break of structure. So you can see this thing kind of dropped to around this area of around this area. Around this area. So break of structure. And this is our major low here, right? This is our major low. Once you get this major low, where's the next inducement? The next inducement must be here. Let's see, we have a valid pullback here. Okay, that has been messed up. So this becomes a valid inducement. Once you get this inducement here, once you break the structure to the upside again, you wait for the new inducement. So this is a valid high, valid low. What's the next inducement? The next inducement is very, very much here. But this one doesn't look good, so I'll go for this one. There. This means that when the market violates this low, it violates this low, then it wants to go down, and this will be a change of character. Let's see what happened. The market instead, it went higher. Right, that's a new break of structure. And this becomes our boss. I mean our low, major low, and this we need to look for a new what? A new inducement. There's a new inducement here. There, if you get this your inducement, then this is a major high. There. Now, if you break that high again, this means that you're going to the upside, but you can see the market did what? Went down and broke the major low. This is not a valid break. And this is now a break to the downside. And this means that this is your change of character. Change of character. Now, since that we have a change of character, what next? We need, again, an inducement. Where's an inducement? The inducement here is this one. Once you get inducement, this is your low. Now, where's the extreme high? If it violates that high, protected high, this is your change of character. Again, once you get the change of character, we need inducement. Where's the inducement? There's inducement here. This is a high. This means that this low is the one that is protected. So we are bullish on the euro. And if you look at the euro, it has always two levels of interest. When you have this extreme, then this means that this is the low that should not be what? Violated. If it violates that one, you get what we call a change of character. So let us see what happens here. Okay, this law has not been violated. So euro right now it's bullish according to a monthly time frame. And let's see what we call decisional area after inducement. After inducement, your first decisional order block is this one. And you can see it happened to fail. If it fails, what happens? Let me show you. When the market is bullish and takes out inducement, it gets an order block there and it has something like this and it goes up. Takes out and goes up, something like this. First, we must take out always the inducement, catch the high, the low, break the structure, boss, wait for the new inducement to be taken out, right? Inducement. Once this inducement has been taken out, always you'll have two levels. A decisional order block will always just come below the inducement, because inducement is just a form of liquidity, and you'll always have another area at extreme. So what the market will do most of the time, example, if it's dropping towards the inducement, it will create what we call another pullback and mitigate here. So if this level is gonna fail first, the market will go up to sweep this high, wait to find the energy to go down, and it will be doing this, yeah? Sweep the high like that. Sweep the high like that until it mitigate this level, then it goes to the upside. So you find that you end up taking out what we call internal inducement like that until it mitigates this level, and then it goes to the upside. So let's look at what the euro is doing right now, or what it has been doing. We look at this is the area, but you can see what happens. It just goes up, mitigate, take out the previous structure. Again, it goes down, it breaks the structure and do what? Take out the previous structure, goes higher, mitigate any level there, then it continue going down. So where's the extreme level? Extreme order block is here. This black candle. That's extreme OB on Euro USD, right? This is extreme. So this seems this is where Euro was looking at to come to. So if we have that area, then what is going on here? This is what we call the monthly internal structure. You have to understand how the internal structure works. A proper internal structure should also have inducements. But what we are seeing here, mitigation of that order flow. So what we have here is just the high, the low, the new high. If it breaks here, it gives you the new low. That was the new low. The new low is here, right? If this is a new low, the inducement here we can see we have a very valid huge inducement here. All right, inducement. And what are you seeing here? All of this just an order flow that was mitigated and price dropped to the downside. And again here we have broken the structure here. Broken this structure. What's the high and the lows? This is a major high, this is a major low, right? And this is just what you call internal structure. So in this internal structure, we see that we don't have inducement. And if you have inducement, it must be hidden. Let me see here. Okay, yeah, I see one here. This is our inducement here. So for this market to properly go to the downside, it needs to go where? Up, take out that inducement, then drop. And according to this structure, this is your extreme supply. All right, that's the area that we need to go back to. So this is what we call a monthly pullback. To that area, then we get a drop to the extreme monthly bullish order block. So what we can look at this structure on a lower time frame, like maybe weekly and daily. So when you look at this structure here, the market has been creating what we call liquidity levels. Yeah, look at this. So if those are the liquidity levels that the market has been creating and it has already taken out liquidity, in this leg, look at this. This is your extreme or B. All right, order block is there. And the market, even it will have come down to this area, will have been better. But let's look at where the market is again here. Look at this area. There's a sweep of liquidity. And you know, in the market sweeps liquidity, if you look at the order block of a characteristic of an order block, you see if it sweeps, then you're left with this area. Because this shadow is also mitigated. This shadow is also kind of Mitigated. So if it's mitigated, what happens? This become my first decisional area, and this is my extreme to go in for a buy. And guys, this is a weekly time frame. So let's see what happens. You see, the market already tapped into this zone. And since it has tapped into this zone, and a lot of confluence we have that we need to be bullish according to fundamentals, and fundamentals moves the market, then this means that we have this area of interest and here. But now since we are here, this is where we put our focus and you can see the sharp reaction of the market. So we can narrow down to like 1 hour and start looking at that structure properly. Okay. Now look at this structure properly from the previous structure. You see that the market has been doing what? Taking out inducement, creating the low, the high, break the structure, boss. We look for inducement again. Where's the inducement? This here. The low. What we have here, this is just an order flow. Order flow that was later mitigated, right? The mitigation of that order flow. Market went down again. Remember last time when we talked, I told you that you wait until this high is broken for you to start looking for a buy position. The market failed to break that high, so there's no way you could look for a buy. So this is our break of structure, continuation to the downside. Now we're here. Market after mitigating this level. There's a way I know that my entry model allows me to call this level a change of character, but because I want to get a stronger confirmation because I'm having two decisional demand zone and want to take you back to where I told you. Wait for this market to break this structure. Right, when it breaks that structure, that will be our confirmed bullish move. Now let me go to 15 and show you something. On 15 minutes, you can also trade what we call a pullback because of the market took out this low. There's an inducement. This was your high, this was your low, and you have broken above it again. Break of structure. Market came down, took out this inducement. And the main, I was just watching this market as it came down. Now, when it came down, mitigating this level, we can see, according to this area, right as an order block, mitigating that level. So we are now here on Euro USD, still pushing to the upside, but with the internal structure. So if you didn't catch it down here, let it break this structure there. Then when it comes down to this, around these areas, then you can go long. This is the Euro USD. And that's why when I take you to the Euro USD, where I'm watching now, this is where I am. You see, this is my entry, first entry, and I'm waiting for the market to break. If it comes back here, I want to watch the market around this zone. And you can see it goes back to my, yeah. You see. So I'll be watching, but I'll want to see it first break the structure before it comes down. So that's my idea, guys. And these are my entry plan. I want to see entry, I want to see change, I want to see change of character, inducement being taken out, decisional and extreme order block, IWR execution. Then I want to understand which session I'll be trading. So guys, I hope I'll see you soon on the next video. And as well, if you wish to join our community, because this time, this particular December, I will not be trading so much. So I'm going to focus so much into technicals. And if you want to join our community, I'm going to start a new class this December for purely technicals, yeah? So if you're willing to join and learn with us, you're welcome because classes starts on when is today? December. That's next Monday. Next Monday we start classes, and everybody's welcome to join. And as well, we'll see what we're gonna do. So make sure that you use December well. You don't have even to come to me. You can find anybody else. There's so many mentors out there. Look at your favorite mentors. Go learn this skill. Yeah, talk to them. Use your December well. Don't party and forget about January. Learn. When people are now making noise, use this December to learn. Learn a skill properly. Then in January, face the market. Learn from there. Learn from experience. And I'm telling you guys, next year is going to be one of the best years. In fact, this goes to my community. Guys, you understand what I'm talking about. Those who are in the community are going to have, next year is going to be the game changer. So I hope you lock in. And as well, I'll see you guys on the next video. I can update you on the next video, which is the NSD-USD. We'll also talk about it on my next video. Others, guys, see you around.